Hi guys, welcome to my YouTube channel. Please do subscribe if you haven't subscribed. We are going to be analyzing our gold, the bullish one that came here. We are going to be analyzing it fully using pure price action. What we did, we observed a bullish flag. So the first thing was now drawing the trend lines to show the flag, and this is showed by denoting a trend line that is at least 2 points, and here we're given almost three points. The first one was this one, then this one, then this one is a point. So that's how you draw trend lines. You draw connecting the wicks, the points that are connecting. Then we took the lower trend line, then we draw the upper trend line, which was this point, this point, this point, this point. That's when you observe that our bullish flag is going to form. Then of course this is the pole that to show our flag. So our flag will be like this, then it's supposed to go this. So when we are here now, it means that's where we are supposed to execute the market. And now what we are now expecting now is a significant break to the upside. And then when a significant break to the upside occurs, then we were supposed to form another bullish flag there. This is what we call a pattern inside a pattern. So what we were expecting was a significant break to the upside, then a retracement, then the bullish run to the upside here. So the flag, the small minor flag, can form to the upside of the trend line or to the downside, but for it to be much more feasible, it means it has to form on the downside of the trend line. So here, that's what we were now expecting, that when it occurs here, a bullish flag, it might come around here, then it just goes up to here, then it goes to perfectly form a pattern. That's what we're expecting here, or just a significant break there. We would put a Fibonacci 2 here, but morely we would just want a retest, a flag that confirms that a pattern has been formed and there's been a significant break of the trend line. So that's what we were expecting now to see. So this, guys, is what we were expecting, and this is what we executed. As you can see now that it's a very beautiful flag here. So you see now you can connect just 2 points here and here, and if you look at it here, we didn't recognize this because of but this was a reversal pattern that formed here. It was a very reversal pattern, like it's called a falling wedge. It will be like this, whereby it shows that the market is losing momentum. It's losing momentum, so it's a reversal pattern that was formed here. That was another confirmation for us to know that this bullish run is going to come, because this on its own, it's a very much reversal pattern. So we were expecting now that a significant break here and the retest has to okay, then we go up. So it was a break of retest, then a retest of the trend line, then we go up. So yeah, that's how we analyzed this pair. That's how we analyzed this pair. As you can see, this was an area of congestion. So the underlying tactics between a flag is there has to be an impulse, then correction, then another impulse. When we are saying correction, we are saying at this there is congestion. The market is stop hunting. The market is just consolidating each and every time. Then as there was an impulse here, and when we are saying an impulse, we are saying the market was just going on without correcting. But then when the market goes impulse, it has to correct. That's the nature of the market. It has to correct. Then after correcting, another impulse has to follow. So let's go back to the after to see what we got. Okay guys, so this is our textbook's pattern of a flag. That's how it goes. This is the flag pole, and then this is the flag, So how you trade it, you measure here, then you measure here. This will be equals to your TP, your first TP. So what you do is when you have drawn everything, first this is okay, let me go with you slowly. So this is how you trade it. First thing first, you join the lower trend line, then you draw the upper trend line, joining the wicks, then you join the wicks as well. And then when it reaches the breakout point, here, it has to break the upper trend line. After breaking that upper trend line, then you go up. So when it breaks here, it breaks the trend line, then it retests, then it goes up. So when you want to enter trades, you enter at the retest. Another confirmation there is when it breaks here, it forms another continuation pattern. That is a confirmation on its own to show that it's going to go up. So here we expect a pennant or a flag as well, another flag forming. That is our confirmation patterns that we expect. We expected this break of the trend line at the retest there. So that's how you trade the pattern. So now to observe your first TP, you take an arrow, you go to the objects. Right now I'm not at the charts there, but I will show you. You go at the charts there, then you what? Then you draw that arrow from the consolidation point to the upper point here. Then you copy or you drag that same flag as it is. You touch the middle part there, then you just drag it up to here. Then you put this lower point of the arrow to here, to the lower point here. Then here it will just be like this. That same length here will be the same length here, and that will be your TP. That's how you measure your TP. So you just enter here, then you chill, wait for your TP to be hit. Easy as that, but you know what? Trading is all round up with emotions. The trading is actually so complex than dating or being in a relationship or a marriage. It's just too emotional, you know. But when you master your psychology, you master your aspects, you'll be very much profitable than ever. And now to round up what we did in analyzing this pair so that you get back the concept, this is what we did. We joined the bottom part, yeah? We joined the bottom part, then we copied that same chart, that same trend line, then we put it across here. Then we put it so that it really aligns with what we did here. Then this was our flag, and this was our entry point. This one right there was our entry point. And then when we did this is when there was this break, we knew either way there was gonna be a retest. This is H4 setup, so we were expecting a retest, and as you can see, there was this first retest that came here. This one, we would enter here, then break even. If we hit our break even, that's cool. We wait because we know either way it's going to happen. Then later, you know, when it breaks here, if you go to the lower time frames, it has to form another continuation pattern. So we'd go to our H1, check what's there, then you know, yeah, as you can see, then go to 30 so that it becomes more clearly. And as you can see here, another pennant was formed here. Then we draw our pennant here, on our pennant here, and just like this, there's now a pennant here. As you can see, it's a pennant here, like this. Then this, it's now a pennant, as you can see. I hope you are seeing it clearly. Yeah, as you can see, it's now a pennant here. So our entry point would be just at this break. There are many entry points here, but the aggressive one is just as it breaks here, you enter, then you put it. This has a larger risk because you put your stop loss just below this low. Then when it retraces, as you can see, it came and touched the trend line again. That was another entry point. This one is the conservative one. the conservative one. You enter as it touches the trend line there, you enter your positions, then you chew, then you know we are going to what? We are going to be milking the market. We are going to be milking. And when we drew our H4 flag here, you would put this is our pole. This is our pole. So now this is our pole. So in measuring your first GP, as you can see, there's been formed here a pennant. You would then copy this one, then you put it. This bottom part should touch the bottom of the pennant, and this one would be your first TP. As you can see here, this would be your first TP here. So around here you would put your TP, your first TP. You enter many positions. That was your first TP. You enter here, then you are in profit. Then the second TP, this one is the second TP, but it's the first that you should measure when after analyzing your flag pattern. Here you copy the same thing. That's how you analyze. Then you put it the bottom part here, then at the upper part here. That's your second TP. That's your second TP. Then you put a triangle here. You put a triangle. Then you put it here. Then you put a line here. You put a line here. Then you know 27.33. That's our TP. That's our TP there. That's our TP. Then you just chill. So when you enter your market here, when you enter your market right here at this point here, and when you enter your market here, your first TP was supposed to be this one, your second TP this one, then you relax. As you can see, that's how these things are milked. That's how this yes, there's fundamentals involved, but mostly the technical just applies however it applies. So this is how milked. It was a very beautiful setup, as you can see, a very beautiful setup that happened. And as you can see now, you expect a retracement from that level because it has to consolidate. So the market moves in many directions. It moves in significant patterns. It moves in an impulse zone. This is the impulse zone. Then it has to correct. This is our correction zone. That will be our flag pole. As you can, if you look at a flag pole, there's a flag pole, then there's a flag, then another flag pole has to come. And then that's how you milk this thing. That's how you milk